So far this year, midstream energy infrastructure is having a good year. Things seem to have turned around. One of the reasons is that free cash flow is really starting to grow, and there are two things that are driving that. One is that the money being spent on new projects, growth CAPEX, is coming down, but also the return from existing assets, distributable cash flow or DCF, is going up. Last year, the industry generated $1 billion in free cash flow, a really small amount relative to the 500+ billion market cap of the sector. We think in 3 years the sector will be generating $45 billion, a huge jump. That will give it a free cash flow yield above 8%, very competitive with the S&P 500. So returns are going up. A lot of investors complain about volatility, and the sector has certainly been more volatile in recent years than we all got used to before the shale revolution. During the energy crash from 2014 to 16, volatility levels tripled and rose even more than that. But there are signs now that volatility for the sector is starting to come back down to that half to three-quarters of the energy sector that we're really used to. So you have two things going on here. You've got rising free cash flow and you've got falling volatility, higher return expectations, lower risk. A lot of investors use the capital asset pricing model as a framework to decide if securities are cheap or expensive. And there's a concept called the efficient frontier, where the best portfolios are supposed to lie, that give the optimal trade-off between risk and return. We think for a lot of investors, energy infrastructure has looked very unattractive on this basis because the risk has been perceived as so high, because volatility has been high. But now what you have is risk is coming down, return expectations are going up, and this sector should be moving back out towards or even through the efficient frontier for investors that use a capital asset pricing model type of valuation. This is the type of development that we think will attract generalist investors to the sector, something that's been long awaited by many people who are invested in the sector today. And we think it's a reason to be very positive about the outlook over the next 1 to 2 years as new investors are attracted to a sector that provides long-term attractive cash flow returns with falling volatility. I'm Simon Lack. We invest in energy infrastructure.